Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very good morning. Today will be Wednesday, the 24th of January 2024. So before we start, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this documentation is not necessarily indicative of the future or likely performance of the product. Okay, so before we start the short-term technical outlook of the various cross assets, so let's have a recap of what happened yesterday, especially during the European and the US session, and as well as how does it impact the cross asset classes performance and the key data and events that has taken shape since yesterday till earlier this morning before we speak. All right, so yesterday was in terms of cross asset performance was another I would say relatively risk-on behavior in the major US stock indices led by the mega cap stocks. Why? Because both the SPX and the Nasdaq actually rallied by 0.29% and 0.43% respectively. The Dow Jones and the Russell kind of lackluster, but not so much of a major kind of a underperformance, just slightly. The Dow Jones Industrial in the average shared a very minute loss of negative 0.25%. The Russell 2000 fed a bit weaker at negative 0.36%. The dollar was almost sideways with a small gain of positive 0.16%. And then we're going over to the commodities. The gold also pretty much sideways, still holding above that $2015 support level that I highlighted since on Monday, a level to watch out for. So gold XAU pretty much sideways movement for now. And what's interesting over here is that oil price continue to actually tick up on the upside. So that actually came in within our buyers as well for those who actually follow our daily dose since the start of this year, due to this ongoing geopolitical risk, we call it tension in the Middle East and Red Sea area. So what's very interesting over here is that there is actually more signs of positive technical elements has been starting to develop in the West Texas oil. So West Texas oil WTI ended yesterday US session with a positive gain of 1.6%. Okay, so now what are the key events that we should be looking out for and that we should be taking note for that has really took shape yesterday that could impact their respective cross asset prices in the next coming days in the short term will be BOJ. So if you know that yesterday BOJ within our expectation, they came in no change. That means in terms of the short-term negative interest rate, they still keep it as usual, stand pat at negative 0.1%. But what's interesting over here is that the guidance that was given during a BOJ governor, let me expand my screen. Yeah, during BOJ governor press conference, he actually hinted that there are Japan now finally is on the goal of hitting the inflation target of 2% with a hawkish tilt. Very rare. BOJ Governor Ueda has made this statement so far since he took the hint of being a BOJ governor almost a year ago. So previously in his past press conference, he also did more erring towards the cautious side that 2% inflation target may not come out as deemed as expected. That was in the past. But however, yesterday he sounded a bit more confident due to the fact that it's actually more of a forward guidance play. We call it tinkering to actually preempt traders and market participants that very likely BOJ is going to move in April. Okay, April or May. So why April or May? Because this is where at the end of March, that means the before the start of a new financial year in Japan. So Japan is a bit different from the rest of the world. They start their financial year in April. So by the time end of March, this is where the employees unions has really more or less ended their wage negotiation for this coming year, for the next coming year for the next new financial year in Japan with their respective employers. All right. So more or less right now there's indication that wages are on the very sustainable path of increase on the upside. So after BOJ officials managed to get a more concrete evidence or numbers of this wage increase that is much more we call it the findings that will be shown after the end of this wage negotiation. Then a BOJ governor will have more we call it evidence to actually push for this removal of short-term negative interest rate in Japan. So it's something to look out for, especially it may impact the dollar yen and the Nikkei 225 as well. Okay, so that I will cover in the short-term technical outlook. So other we call it events that took shape at the start of today. Asia session morning will be Netflix. So as you all know that right now, until towards February and early March, this is where we start to see a slew of quarterly earnings out from US Q4. Their previous last year Q4 earnings. So Netflix actually surprised market on the upside. So they actually rallied close to I think about 20%, I think more than 30% after the close of the US session, because the announcement of their earnings was yesterday US session after the close. So they actually post best customer gains since the pandemic. All right, so something pretty much rosy in terms of quarterly performance. And what's interesting over here is that Netflix now has a new initiative over here. They call it they tie up with those who are actually interested in WWE, World Wrestling Federation World Wrestling Entertainment, WWE. Now they actually have this live wrestling we call it a program that will be telecast in Netflix. So right now we are seeing that Netflix now, instead of doing we call it a preloaded drama series or preloaded so-called movies in a way, right now they are showing live events. So in the near future they could actually may start showing maybe perhaps EPL or some other NBA as well. So that actually potentially be another revenue driver for Netflix. So yeah, even though Netflix is a single equity, how does it does has a significant impact on the Nasdaq 100, especially. Why? Because Netflix itself, even though their market cap has started to shrink last year against Tesla or against Nvidia, and moreover events against Meta or slash Facebook, it do have a positive knock-on feedback loop back into the Nasdaq. So as you could see over here is that because it's still deemed as a growth, we call it a technology stock, you see. So Nasdaq itself, the futures during the Asia session, right now we are speaking, they're actually up another positive gain of positive 0.3%. Okay, so another news on highlight over here is today's Asia session. Before we speak, right now we also released a week of flash PMI data across the globe. Pardon me. So what we have today is from Japan. So Japan Manufacturing PMI flash. What is flash? It's preliminary because now it's showing January, but January hasn't ended yet. Okay, so the finalized figure will come out around the first week of February next month. But this will be a clear indication of business activity on the manufacturing side and the services side. So Japan manufacturing is still contracting. Anything that's below 50 is contracting. But however, it managed to inch back slightly higher from December figure of 47.9 and still within expectation of 48.2. And what's interesting over here is that services continue to be resilient. It continued to hover above 50 level for the entire year last year. And right now in the January preliminary findings over here is that they actually surpassed last month number of 51.5. It came in at 52.7. So if you look at the trend on Japan Services PMI, it's actually ticking on the upside. So there's actually a acceleration in the last 3 months. So this is giving us a sense that services inflation also starts to improve as well, because services PMI is actually services activity. So the more services activity, it will tend to push up services related inflation. So that is also another point to make that over here is that BOJ right now is much more confident that Japan has indeed exit from a very decade plus of sticky deflationary environment, which is net positive for the general economy, and it could be also potentially positive for the Japanese equity market as well. All right, now that's pretty much sum up for the events that I want to share with you all, and as well as how does it relate to their cross asset classes performance. Now let us jump straight to the technical outlook, the short-term technical outlook. Okay, so let us start with the stock market first. Okay, the global stock indices. All right, so let me expand my screen so that you guys could see. Okay, so over here, let us start with the Asia indices, Japan 225. So Japan 225 over here is that yesterday we do expect that pullback. Yeah, that pullback took shape. And what's interesting over here is that after that, it managed to survive right at our predefined short-term pivotal support, which is 36,150, and the stage is bounced. And today, Asia session, there's a slight sell-off, and right now it's resting right again at the 36,150 level. So for sure, this level is a key pivotal support level to maintain our short-term bullish bias on the Japan 225. First resistance to watch will be definitely the yesterday's minor swing high level and corresponding to the psychological level of 37,000 K, 37,000. Above it should take us potentially exposed to the next resistance at 37,480. Only an hourly close below 36,150 will kind of negate this short-term bullish tone to kickstart a minor corrective decline towards 35,350, which is the congestion area of 11th of Jan and the 17th of Jan minor swing low, and potentially also the upward sloping 20-day moving average should come very close to act as a support level in the next couple of days. Okay, so net still maintain that short-term bullish bias on the Nikkei 225 or the Japan 225 as long as managed to hold above the 36,150 short-term pivotal support. Hang Seng, Hong Kong 33. So Hong Kong 33 continues to actually hover above the 15,000 short-term pivotal support after yesterday's so-called announcement of this stabilization fund. So what is this stabilization fund? A quick recap is that the China top policymaker is gathering offshore account of their state-owned enterprise, state-owned enterprise offshore account to actually fund, put in the fund to actually fund some portion of this account to pull it back to a stabilization fund to buy China shares, either A share or H shares via the Hong Kong Stock Exchange. So that actually kickstart a bit of short-term animal spirit. Yes, we know that for sure this is a stabilization fund. It's just as a what I call it, potentially a short-term solution to negate this ongoing negativity or negative feedback loop that is prevalent in the China and the Hong Kong stock market. Will it start to kickstart a major bottoming configuration? In terms of a fundamental perspective, to me, I said very low chance. Why? Because the crux of the problem still lies with a very weak persistence property market, and will lead to a very weak business and consumer sentiment. So policies got to actually change that weak consumer and business sentiment at this juncture before it can have a better pronounced positive feedback loop back into the respective Hong Kong and China benchmark indices. But in the short term, we know for sure that 15,000 short-term pivotal support is still the support level to watch to at least see a potential minor corrective rebound within this medium-term and major downtrend of the Hong Kong 33 that's still prevalent since last year. Support level, resistance level to watch will be at 15,800, followed by 16,000/16,100 level, which is so corresponding with the downward sloping 20-day moving average. Okay, that is soon to be acting as a resistance as well. However, hourly close below 15,000 short-term pivotal support will see a further potential slide to retest 14,600. So that is the October 2022 swing low level on the Hong Kong 33. Okay, now European index will be the German DAX. So German DAX going to shape higher high and higher low. And yesterday during the US session, it managed to surpass the 20-day moving average. So with that positive development, additional positive development that took shape, we will tighten the key short-term pivotal support for today at up to 16,640. So as long as 16,640 holds, we will still maintain that bullish bias to see a uptick towards the top of the range. 16,790, a break above it exposes this minor range top that is still in place since 14th of December, acting as a resistance at 16,970. Only an hourly close below 16,640 will see another round of choppy decline within this range configuration to retest 16,515, which is now corresponding to this upward sloping 50-day moving average. So net, we still maintain that short-term bullish outlook on the German 30 as long as this tightened key short-term pivotal support holds at 16,640. Now, moving on, next will be the US Wall Street 30, Dow Jones Industrial Average, continuing to bounce higher, hit the first resistance that we mentioned yesterday before shipping that pullback during the second half of the US session. And what's interesting, it managed to stage a rebound up from there. So there's some like a minor V-shaped recovery. And where this V-shaped recovery took shape, it took shape right at the previous all-time swing high area of range resistance now turns into pullback support at 37,800. So we will use a Titan key short-term pivotal support for today. For sure, this level is pretty key given that it's V-shaped recovery. 37,800 short-term pivotal support level. 38,100 above it exposes the next resistance level at 38,400. Only an hourly close below 37,800 will deem this as a failure bullish breakout to see another round of choppy corrective decline back into the range configuration again that took shape at the start of this year to test the next support level at 37,550. Okay, so net all in all, still maintaining that short-term bullish bias on the US Wall Street 30 as long as this Titan key short-term pivotal support at 37,800 holds. All right, now lastly will be the US Nasdaq 100. Nasdaq 100, pretty sure is the strongest. We call it major stock index right now. A lot of people say that it's FOMO, but I still got to respect the bullish momentum. What's at this moment in time, there is still no signs of an exhaustion. So given there's no signs of a bullish exhaustion, so we will actually follow the trend by having a tighter short-term pivotal support to ride this trend. Okay, so right now what we could see over here is that it actually hit the resistance over here, 17,500, then shaped that bounce, shaped that pullback, then thereafter that we call it this minor rounding we call it formation, which is bullish. Then thereafter, right now during the Asia session, is attempt to surpass this level after that, reinforced by that optimistic Netflix earnings results. So the next resistance level to watch will be 17,580, a Fibo extension level, followed by 17,550, which is a Fibo extension level, and confluence with the top of this minor ascending channel that I drew from the low of 27th of October. So now with the fact that this is a rounding bottom over here, I will use 17,290 as my key short-term pivotal support for today. So this level will be a short-term pivotal support. All right. Okay, then thereafter, we will actually tighten the key short-term pivotal support for today at 17,290 for the Nasdaq 100 to maintain that short-term bullish outlook, okay, towards that mentioned resistance area over here. Only an hourly close below 17,290 negate this bullish tone to kickstart another round of minor corrective decline towards 17,130 in the first step. Okay, so net overall still maintain that short-term bullish outlook on the Nasdaq 100 with a tightened key short-term pivotal support for today at 17,290. All right, so that's pretty much sum up for the benchmark major stock indices across the globe. So to recap, overall, the bullish bias, short-term bullish bias still remains intact with those respective short-term pivotal support that I highlighted earlier. Now, moving on will be the FX market over here. So the FX market, let's start with the European currency first. All right, so FX market. Okay, European currency. So what we could see over here is that the euro dollar yesterday it hit that first resistance that we highlighted, come break above 1.0905 before it collapsed during the US session. Then thereafter a bit of whipsaw before shaping that V-shaped push up over here. So there's a bit of whipsaw around the 200-day moving average, which also correspond to our short-term pivotal support that we highlighted since late last week, will be 1.0840. So give a bit of excess right now. Yesterday's low will be at this 1.0820. So I give an excess 1.0840 slash 0.820 over here. So this will be my short-term pivotal support level. So with this short-term pivotal support level, we'll still maintain that bullish outlook, short-term bearish bullish outlook, short-term bullish bias, pardon me. First resistance to watch will be that 1.0905. So this is very clear since last Thursday is not able to surpass this level very clearly. Only a break above 1.0905 slightly will actually expose the next resistance to come in at 1.0965. So this level is a minor congestion area from 11th of Jan to 16th of Jan, and as well confluence with this 20-day moving average as well. All right, only an hourly close below 1.0820 will see a further slide to test 1.080 followed by 1.0750. So I was using a slight adjusted short-term pivotal support level on the euro dollar to see a bit of what I call potential push up towards the 20-day moving average that is acting as a resistance in terms of a maximum upper limit. But for sure it got to surpass 1.0905 first. All right, now sterling dollar. So sterling dollar, right, as usual, since late last week on Thursday, it's not very clearly. It's been trading within this minor triangle range configuration that is in place since the high of 28th of December last year. So we are since it's churning inside this, so I'll still remain a kind of a sideways range bias or neutrality stance. Still no change between 1.2760 and 1.2640. All right, still trading within these two range over here, holding above the 50-day upward sloping 50-day moving average, as well as the lower limit, which correspond to the lower limit of the neutrality range at 12640. Okay, now Asia Pacific currency. Let us start with the Japan. So in Japan 225, right, right now it started to be rather sideways, but still holding above the 14930 short-term pivotal resistance that we highlighted yesterday. So what we could see that yesterday, yes, it dipped down after the BOJ announcement. Then after that, it go back up again, and now the trade sideways. So with that, right, we're still using these two levels to watch. Okay, so still maintaining that rather slight short-term bearish bias on the dollar yen. As long as 14930 short-term pivotal resistance didn't surpass to the upside. First support level to watch 14730 that was tested yesterday. Hourly close below it may expose the next support level. In first step at 14625, we also correspond to the former minor swing high of 11 Jan and confluence with the 50-day moving average. I think it's a support as well. Only an hourly close above 14930 will invalidate this slight short-term bearish bias to see a squeeze up to test the next resistance at 150.20/70, which is the top of the range, not top of the ascending channel. All right, since the low of 28th of December. Now, lastly will be Aussie dollar. So Aussie dollar continue to play around this 65.70 short-term pivotal support level. So no change. I'll be using a slight yesterday because it actually tested like the euro dollar. There's a low that's being formed on the European US session yesterday at 6550. So I'll be having a kind of a access. All right, so as long as 65.70/50 US session low maintains, why I still maintain that short-term bullish bias, because momentum indicator on hourly RSI is pretty positive. Why? Because yes, despite the fact that yesterday it came down, but it managed to form a higher low, okay, higher lower over here. All right, so what it means that the RSI remains on support level, indicate to us there's some signs of short-term bullish momentum or positive momentum that start to creep back into the Aussie dollar. Okay, this is the hourly chart. Okay, so as long as 65.50 short-term pivotal support holds the first resistance to watch, I will use yesterday's minor swing high, which was tested twice. All right. Okay, tested previously on Monday and yesterday as well, and yesterday as well. That will be at 66.10. So 66.10 first resistance, above it potentially expose 66.40, which correspond with the 50-day moving average and this minor descending trend line from the high of the day of December. Only an hourly close below 65.20 will expose the medium-term support level at 65.20. All right. Now, moving on will be spot gold. So spot gold over here continue to churn sideways, right? But holding above that 2015 short-term pivotal support level. So all in all, right, it managed to go to this sideways range. So as long as this 2015 short-term pivotal support didn't surpass to the downside, potentially it could see another tick to test 2045. So this is something like a bullish bias within a range configuration. Above 2045 exposes this key minor range resistance that is in place since 5th of Jan this year, that was tested one time and two times on 12th and 15th of Jan at 2060. All right, so how only an hourly close below 2015 will see another leg of minor corrective decline to test last Friday's swing low, which is close to the psychological level at 2000. So then that still maintain that short-term bullish bias within a range configurations for spot gold, as long as 2015 holds on XAU/USD. So lastly will be WTI crude oil, West Texas oil. So West Texas oil, what positive over here right now, we start to see very clearly it managed to go above the 20-day and the 50-day moving average on the hourly chart. So let me bear in mind, this is the hourly chart of West Texas oil. So in trading view, one of the best feature in trading view that we are able to overlay higher time frame technical elements on the lower time frame chart to do multi time frame analysis on a single chart, like what I'm doing right now. So what we could see over here is that it seems to us that this previously choppy movement has starts to be negated, and now it starts to evolve into a short-term uptrend. But short-term uptrend still managed to be kept by the intermediate resistance zone of 74.95 and 76.05, which was the minor swing high of 27th of December. So with that, right, I will still be looking for any potential pullback to maintain that short-term bullish bias on West Texas oil. For sure, definitely the key short-term pivotal support level will be at 72.60. I do not want to tie it so tightly to yesterday's swing low, which is at 73.56 level. All right. Okay, so as long as that potential pullback didn't surpass below 72.60, still maintain that short-term bullish outlook. Resistance level to watch 74.95, then thereafter followed by 76.05. Only a clearance above 76.05 potentially will start to see a pronounced more short-term recovery to retest the 200-day moving average, now also acting as a resistance at a psychological level of 78 figure level. Only an hourly close below 72.60 will actually invalidate this short-term bullish outlook on West Texas oil to see another round of choppy decline to test the lower limit of the range at 71 figure level. Okay, so that's actually sums up for our short-term technical outlook on the various cross asset classes. So now before we end, let's take a look at the calendar of what are the things to look out for today that could actually kind of trigger a volatile movement in the cross asset market, in the global markets as per se. So like I mentioned earlier at the start, this week, today will be a PMI release data day, flash PMI release data across the globe. So we will have flash PMI data in Eurozone that is coming up at 4:30 p.m. Singapore time, German, France, then you have the aggregate one, the Eurozone one at 5 p.m. Okay, Singapore time. Then thereafter 5:30 we'll go on to UK, Manufacturing and Services PMI flash. Then after that, throughout, you have the US session will come in at 10:45 p.m. All right, for both the flash data as well. And for those who are looking at the Canada currency, you have Bank of Canada interest rate decision that's up at 11 p.m. Singapore time. And also, as you know that right now we are in the heat of the US earnings season quarterly report over here. So what we have over here in tomorrow Asia session early morning, that means i.e. After the close of the US session, that means on Wednesday, we have the all important Tesla that is reporting their earnings results at the close of after the close of the US session. All right, so that's pretty much sum up for today's daily dose of market insight. So we have already covered the 30-minute mark. So with that, I'll end today's session and have a great day ahead, and we shall speak again tomorrow. Thank you.